Look at your screen. Now picture this. A sun-drenched yacht, a laptop open to a chart showing a massive green candle, and a caption that reads, "Another day at the office." You've seen it. The manufactured reality of the Instagram trader. The promise of infinite freedom, effortless wealth, and a life unshackled from the 9-to-5 grind. Now picture this instead. It's 3 a.m. The only light in the room is the cold, blue glare of your monitors. Your heart is pounding in your chest. Your stomach is in knots, and you're staring at a sea of red, replaying a single, catastrophic mistake over and over in your mind. There's no yacht. There's no celebration. There's only the crushing weight of isolation and the silent, screaming question, what have I done? This is the unseen iceberg. The vast, hidden, and treacherous reality of trading that lies beneath the glittering tip of social media fantasy. They tell you that trading is 90% psychology, and they are right. But they sell you on the 10%, the strategies, the indicators, the setups. They conveniently omit what that 90% truly entails. It's not just about discipline and patience. It's about the brutal psychological price you pay to participate in this game. The stress that corrodes your health, the loneliness that hollows you out, and the anxiety that becomes your constant companion. This video is the conversation the trading industry refuses to have. We are not here to talk about a magic indicator or a guaranteed strategy. We are here to talk about the dark side. We're going to pull back the curtain on the mental and emotional toll of trading, not to scare you, but to arm you. Because acknowledging these demons is the first and most critical step to conquering them. We will explore the deepest corners of a trader's mind, and then we will build a lifeline, a roadmap of actionable strategies to help you not only survive, but to build a sustainable, long-term career in the markets. This is the other 90%. The myth of trading is one of the most powerful and seductive narratives of the modern world. It's a story of liberation. It's the tale of the little guy, armed with nothing but a laptop and Wi-Fi, outsmarting the Wall Street titans and achieving financial sovereignty. Social media has become the grand cathedral for this religion, where prophets of profit post their P&L porn and preach the gospel of financial freedom. This illusion is built on a kernel of truth. The market does offer incredible opportunities, but it's wrapped in layers of dangerous falsehoods. The first lie is the lie of speed. The myth sells you the idea of rapid, exponential wealth. Turn $1,000 into $100,000 in a year. It frames trading as a get-rich-quick scheme, a lottery ticket for the intelligent. This fundamentally misrepresents the nature of the profession. Real trading is not a sprint. It's a marathon run on a razor's edge. It is a high-performance skill, akin to being a professional athlete or a concert pianist. It demands thousands of hours of deliberate practice, study, and execution. It requires a level of discipline and emotional fortitude that is almost inhuman. The market is not a benevolent ATM waiting to dispense cash. It is a zero-sum environment where you are pitted against the sharpest minds, the most advanced algorithms, and the deepest pockets in the world. Believing you can casually waltz in and extract wealth is the height of naivety, and it's a setup for failure. The second lie is the lie of ease. The myth portrays a lifestyle of minimal effort, trading from a beach, making a few clicks, and then enjoying the rest of your day. The reality is a stark, brutal contrast. Professional traders are some of the hardest working people you will ever meet. Their days are structured with rigorous pre-market analysis, focused execution during market hours, and meticulous post-market review. Screen time isn't just an hour or two, it can be an all-consuming affair, blurring the lines between work and life. The mental energy required to stay focused, avoid cognitive biases, and manage risk for hours on end is profoundly draining. It is anything but easy. Perhaps the most dangerous part of this myth is how it primes your brain for destruction. When you first start, you will inevitably have a few successful trades. It might be pure luck, or you might have caught a strong trend. Your brain, however, doesn't register the nuance. It registers the reward. A winning trade unleashes a flood of dopamine, the same neurotransmitter associated with pleasure, reward, and motivation. It feels incredible. It feels like you've cracked the code. This initial dopamine rush is the bait in the trap. Your brain immediately craves a repeat of that feeling. It begins to associate clicking buttons with a euphoric reward. This sets a perilous precedent. You start chasing that high, not the high probability setup. You start to believe the myth because, for a fleeting moment, you lived it. You felt the power, the thrill, the sense of being right. But the market is a master of random reinforcement. It gives you just enough wins to keep you hooked, to make you believe your luck is skill and your impulsiveness is intuition. You are conditioned to seek the glamour and ignore the underlying statistical reality. The myth doesn't prepare you for the inevitable, soul-crushing drawdown. It doesn't teach you how to handle the psychological fallout of losing 5, 10, or 15 trades in a row. It only shows you the finish line without ever mentioning the minefield you have to cross to get there. Deconstructing this myth is not about being cynical. It's about being a professional. A professional understands the true nature of their field. A surgeon knows the years of grueling study required. An athlete knows the daily pain and sacrifice. As a trader, your first professional act is to discard the fantasy and embrace the reality. The reality is that this is a hard, demanding, and often punishing profession. And only by accepting this truth can you begin to build the mindset required to endure and eventually succeed. Of all the challenges a trader faces, one of the most corrosive and least discussed is the profound, gnawing loneliness of the profession. In almost any other high-stakes career, there is a team, a support system, a shared sense of struggle. Surgeons have their operating teams, lawyers have their firms, athletes have their coaches and teammates. A trader has a screen. By its very nature, trading is an act of solitary confinement. You sit in a room for hours on end, staring at flickering lights and abstract patterns. The decisions are yours and yours alone. The risk is yours. The consequences, whether euphoric or devastating, are yours to bear in silence. There is no one to turn to in the heat of the moment and ask, "What do you think?" There is no colleague to debrief with after a tough day. There is just you, the market, and the deafening echo of your own thoughts. This isolation creates a psychological breeding ground for our worst cognitive biases. When you're alone, there is no one to challenge your assumptions. A flawed idea can quickly spiral into a deeply held conviction without any external friction. You can fall in love with a trade, a bias, or a particular market view, and there is no one in the room to offer a dissenting opinion, to play devil's advocate, to save you from your own tunnel vision. This is how traders blow up accounts, not from a single bad decision, but from a series of unchallenged bad ideas nurtured in the echo chamber of solitude. The loneliness doesn't just affect your decision-making, it fundamentally alters how you process your emotions. Consider the aftermath of a significant loss. In a healthy environment, you might discuss it with a mentor or a colleague who could offer perspective, share their own similar experiences, and normalize the event. They might say, "It was a tough day for everyone," or "You stuck to your plan, the market just didn't cooperate." In isolation, that same loss festers. It becomes a source of deep shame and corrosive self-blame. You are alone with your failure. The inner critic becomes the only voice you hear, and it is relentless. "You're an idiot. You'll never make it. You just lost money that you couldn't afford to lose. Shame drives you further inward, making it even less likely that you'll reach out for help. You suffer in silence, projecting an image of control to the outside world while internally you are unraveling. Ironically, isolation can make winning just as psychologically dangerous. When you have a massive winning day, the feeling is electric. But who do you share it with? Your friends and family, while well-meaning, likely won't grasp the significance. Explaining a perfectly executed short squeeze to your partner might be met with a polite but vacant nod. They see the result, the money, but they don't understand the skill, the patience, the nerve it took to achieve it. This lack of genuine, informed validation can lead to a different kind of poison: ego. With no one to keep you grounded, a big win can inflate your sense of self-worth to dangerous levels. You start to feel invincible, like you've conquered the market. You are Midas, and every trade you touch will turn to gold. This ego, born from the inability to share and process success in a healthy context, is often the direct precursor to a catastrophic loss. The market has a brutal way of humbling those who believe they are its masters. The modern world offers a false solution to this problem: the online trading community. Twitter, Discord, forums, they promise connection, but often they deliver a more insidious form of isolation. These platforms are rarely places of genuine vulnerability and support. They are performance arenas. Everyone posts their winners. Everyone is an expert in hindsight. The pressure to project an image of success is immense. Admitting you're struggling, that you're racked with fear or doubt, feels like admitting weakness in a shark tank. So you lurk, consuming the highlight reels of others, which only deepens your own sense of inadequacy and loneliness. You are surrounded by thousands of people, yet you feel more alone than ever. Breaking this cycle of solitary confinement is not just a recommendation, it is a prerequisite for long-term survival. The human mind is not designed to withstand this level of pressure in a vacuum. We are social creatures who regulate our emotions and perspectives through connection. To succeed as a trader, you must deliberately and proactively build a support system outside of the charts. You have to find a way to break the silence. Imagine waking up every single morning with the knowledge that your income for the day, week, and month is not guaranteed. Imagine that your performance is measured in real time, in a language the entire world understands: money. Imagine that a single moment of lapsed focus could cost you a week's worth of hard work. This is the daily reality of a trader. It is a life lived under the unblinking, relentless tyranny of performance. This pressure cooker environment cultivates a constant low-grade hum of anxiety that can easily escalate into a full-blown roar. The anxiety doesn't just appear when you're in a bad trade, it's woven into the very fabric of the profession. It begins before the market even opens. The pressure to prepare, to not miss any news, to have the perfect watch list. It continues during the day, with every tick of the price, every decision to enter, exit, or hold. And it follows you home as you replay your decisions, analyze your mistakes, and worry about what the market will do tomorrow. This constant pressure manifests in several distinct psychological tortures. The first is analysis paralysis. This is the state of being so overwhelmed by information and so terrified of making the wrong decision that you become frozen, unable to act. You see a perfect setup according to your plan. Everything aligns. But a voice in your head starts whispering doubts. What if it's a fake out? What if the market reverses the second I get in? Maybe I should wait for more confirmation. You hesitate. And as you hesitate, you watch the trade move without you, exactly as you predicted. The frustration is immense. The paralysis is born from a deep-seated fear of being wrong, a fear magnified by the immediate financial consequences of that wrongness. Your desire for certainty in an inherently uncertain environment leads to inaction,
which is often as costly as a bad action. The evil twin of analysis paralysis is FOMO, the fear of missing out. This is the emotional hijack that happens when you see a market moving explosively without you. It's a primal, visceral panic. Your carefully crafted plan evaporates. Your discipline shatters. The only thought in your brain is, I have to get in. You start chasing. You buy at the top, just as the early smart money is selling to you. You enter with no plan, no defined risk, driven purely by the anxiety of being left behind. FOMO is one of the market's most effective psychological traps because it preys on our social instincts. We are wired to follow the herd. When we see everyone else making money, it feels physically painful to be on the sidelines. The market leverages this instinct against us. It creates the illusion of an easy opportunity, a train leaving the station that you absolutely must be on. But more often than not, the train is headed for a cliff. Trading on FOMO is not trading. It's gambling on pure, unadulterated anxiety. Perhaps the most grueling aspect of this performance tyranny is the experience of a drawdown. A drawdown is an unavoidable part of trading, a period of sustained losses that chips away at your account equity. No matter how good you are, you will go through them. Intellectually, you know this. Emotionally, it can feel like you are dying. A drawdown is not just a financial event. It is a crisis of confidence. With each successive loss, your belief in your strategy and in yourself begins to erode. The trades that you once took with conviction, you now second-guess. You start to see phantom setups everywhere, or you see none at all. Your mind enters a fight-or-flight state. Every minor tick against your position feels like a mortal threat. Your breathing becomes shallow, your muscles tense. You are physically and mentally on high alert, which is the absolute worst state to be in for making clear, rational decisions. This is when the pressure to make it back becomes all-consuming. You start breaking your own rules. You increase your position size, hoping one big win will erase the pain. You take setups that are far from ideal, just to be in the action. This is called revenge trading, and it is the death spiral for most accounts. You are no longer trading your plan, you are trading your pain. You are fighting the market, trying to force it to give you back what you've lost. But the market does not respond to force, it only responds to discipline. And in a drawdown, discipline is the first casualty of your anxiety.
Before we go any further, if what we've discussed so far resonates with you, if you've ever felt the grip of FOMO, the paralysis of analysis, or the soul-crushing anxiety of a drawdown, take 1 second to hit the subscribe button. We are building a community here, dedicated to these honest, raw conversations about trading. It's the only way we can navigate this path and grow stronger together. Now, let's explore how this immense pressure can push a trader across a very dangerous line. There is a fine, blurry line between disciplined speculation and destructive addiction, and it is a line that countless traders cross without even realizing it. The trading platform on your screen can be just as addictive and just as devastating as a slot machine in a Las Vegas casino. And the mechanism that drives this addiction is identical. It all comes down to a principle known as intermittent reinforcement. In the 1950s, psychologist B.F. Skinner conducted experiments showing that the most powerful way to condition a behavior is to reward it on an unpredictable schedule. If a rat presses a lever and gets a food pellet every time, it will eventually get bored. But if it gets a pellet randomly, sometimes after one press, sometimes after 20, it will press the lever compulsively, endlessly. The stock market is the world's most sophisticated intermittent reinforcement machine. When you place a trade, you don't know if it will be a winner or a loser. The outcome is uncertain. This uncertainty creates a potent cocktail of anticipation and suspense. When the trade is a winner, your brain is flooded with dopamine. Because the reward came at a random interval, the dopamine hit is even more powerful, more memorable. your brain screams, "Do that again." This creates a powerful neurological loop. The action, placing a trade, is linked to a potential, unpredictable, but incredibly pleasurable reward, the dopamine rush of winning. Over time, your brain can become addicted not to the money itself, but to the process, the thrill of the risk, the anticipation of the outcome, the emotional roller coaster. You're no longer trading to execute a well-defined edge. You are trading to feel something. You are chasing the high. This is the point where a trader becomes a gambler. And the most glaring symptom of this transition is the act of revenge trading. Revenge trading is the single most destructive behavior in the trading world. It is the irrational, emotionally fueled attempt to immediately win back money you have just lost. It's not a strategic decision, it is a primal scream. A loss doesn't just reduce your account balance, it feels like a personal attack, an insult from the market. The rational mind shuts down, and the emotional, reptilian brain takes over. The inner monologue of a revenge trader is one of desperation. I need to get it back. I can't end the day red. You abandon your trading plan. You double, triple, or even quadruple your position size, believing that a single win will undo the damage. You take trades on pure hope, with no statistical edge. You are, in that moment, playing the lottery. The market almost always punishes this behavior with brutal efficiency, turning a manageable loss into a catastrophic account-ending event. Every trader who has blown up an account knows this feeling intimately. It is a state of temporary insanity, and the regret that follows is profound. This addictive behavior is reinforced by common cognitive biases, particularly the gambler's fallacy. This is the mistaken belief that if something happens more frequently than normal during a given period, it will happen less frequently in the future. In trading, this manifests as thinking, "I've had 5 losing trades in a row, so the next one has to be a winner." The market, of course, has no memory. Each trade is an independent event. But the gambler's mind creates a false narrative of cosmic balance, compelling you to take the next trade and the next, convinced that your luck is due to turn. So how do you know if you've crossed the line? The signs are subtle at first, but they become glaring in retrospect. Are you trading out of boredom? Are you placing trades just to feel the excitement? Do you find yourself unable to walk away from the screen after a big loss? Do you hide your losses from your loved ones? Are you constantly checking your P&L, your mood for the day dictated by whether it's green or red? Do you feel an uncontrollable urge to trade even when you know you shouldn't? If you answer yes to any of these, it is a critical warning sign. You are no longer in a business relationship with the market, you are in a toxic, abusive one. The addiction loop is incredibly difficult to break because it operates on a subconscious neurological level. It requires a conscious, deliberate, and often painful intervention. You must recognize that the problem is not your strategy. The problem is your brain's relationship with risk and reward. And until you address that core issue, no strategy in the world can save you.
The psychological burdens of trading, the anxiety, the isolation, the pressure, are not contained within the mind. They wage a relentless war on the body. The mind and body are not separate entities, they are an integrated system. When the mind is in a constant state of high alert, the body pays a steep and often invisible price. The primary culprit is cortisol, the body's main stress hormone. In a healthy person, cortisol is released in short bursts during a fight or flight situation. It sharpens your focus, floods your body with energy, and prepares you to deal with a threat. For a trader, the threat is constant. The fear of a loss, the anxiety of an open position, the pressure of a drawdown, these triggers can keep your cortisol levels chronically elevated. Chronic high cortisol is devastating to your health. It disrupts nearly all of your body's processes. It can lead to high blood pressure, increase the risk of heart attack and stroke, and contribute to anxiety and depression. It weakens your immune system, making you more susceptible to illness. It also signals your body to store visceral fat, the dangerous type of fat that surrounds your organs. The stress of trading is, quite literally, making you sick. One of the first and most common physical casualties is sleep. The mind of a trader rarely shuts off. When you lay your head on the pillow, you're not thinking about relaxing. You're replaying the day's trades. You're agonizing over the mistake you made. You're worrying about the position you're holding overnight. You're anxious about the news that might come out before the next session. This mental churn makes it incredibly difficult to fall asleep and stay asleep. Many traders find themselves waking up at 3 or 4 a.m., their minds racing, compelled to check futures or overseas markets. This chronic sleep deprivation is not a badge of honor. It is a form of self-sabotage. Lack of sleep severely impairs cognitive function, decision-making, emotional regulation, and reaction time. Trying to trade while sleep-deprived is like trying to drive a Formula One car after drinking a bottle of whiskey. You are guaranteeing a crash. The sedentary nature of trading exacerbates these problems. You're chained to a desk, often for 8 to 10 hours a day. This leads to a cascade of physical ailments. The infamous trader's posture, a hunched back, rounded shoulders, a forward head position, causes chronic neck, shoulder, and back pain. The lack of movement slows your metabolism, contributes to weight gain, and increases the risk of developing deep vein thrombosis. In the heat of the trading day, health becomes an afterthought. Nutrition devolves into whatever is fast and easy. Caffeinated drinks to stay alert, sugary snacks for a quick energy spike, and processed meals that require no prep time. Exercise becomes a luxury you don't have time for. You tell yourself you'll focus on your health once you become profitable, once you reach a certain account size, but that day may never come if your physical foundation crumbles beneath you. You are sacrificing your long-term well-being for short-term performance, not realizing that your physical health is the engine that drives your mental performance. This physical decay creates a vicious feedback loop. Poor sleep and nutrition increase your stress levels and cloud your judgment. This leads to poor trading decisions. Poor trading decisions create more stress, anxiety, and financial pressure. This in turn makes it even harder to sleep, eat well, or find the energy to exercise. Your body and mind spiral downward together. The market demands that you be in peak mental condition, but you cannot achieve peak mental condition in a body that is exhausted, inflamed, and neglected. Many traders burn out of the profession not because they weren't smart enough, but because their bodies simply gave out under the relentless siege of mental stress. Protecting your physical health is not separate from your trading plan. It is an essential, non-negotiable part of it.
We have journeyed through the dark, treacherous landscape of the trader's mind. We have faced the loneliness, the anxiety, the addiction, and the physical toll. To end here would be a disservice. Acknowledging the darkness is necessary, but it is not enough. We must now turn on the lights. We must build a practical, actionable framework for not just surviving this profession, but for thriving in it for the long run. This is the most important chapter. This is the path forward. Your mind is your primary asset. You must protect and strengthen it with the same rigor you apply to your financial capital. This is not about positive thinking or hollow affirmations. This is about building robust psychological tools. The first tool is mindfulness and meditation. This is no longer a fringe practice. It is a core training component for high performers in every field, from the Navy SEALs to corporate CEOs. Mindfulness is the practice of paying attention to the present moment without judgment. For a trader, this is a superpower. It trains you to observe your thoughts and emotions, fear, greed, anxiety, without being controlled by them. You learn to see a fearful thought arise and simply note there is fear, rather than becoming the fear itself. A simple practice of 10 minutes of focused breathing each morning can fundamentally change your relationship with market volatility and your own internal state. It creates a space between a market event and your reaction, and in that space lies your freedom and your edge. The second tool is journaling. A trading journal should be more than a record of your entries, exits, and profits. It must be an emotional and psychological logbook. After every trading day, take 15 minutes to write down not just what you did, but how you felt. Were you anxious, impatient, overconfident? What triggered those feelings? By externalizing these thoughts onto paper, you rob them of their power. You move them from the chaotic realm of emotion into the structured world of analysis. Over time, you will see patterns. You'll realize you get impulsive after 2 consecutive losses, or you get greedy after a big win. This self-awareness is the foundation of self-mastery. The third tool is the implementation of rigid boundaries and kill switches. Your trading self is not your entire self, and you must enforce a strict separation. Define your trading hours and stick to them religiously. When the market closes, you close your platform. No checking quotes on your phone at dinner, no late-night what-if analysis. You must create a sanctuary for your mind to rest and recharge. Furthermore, implement a kill switch. This is a predefined rule that forces you to stop trading for the day. It could be a maximum daily loss amount or a certain number of consecutive losing trades. Once that line is crossed, you are done. No exceptions. This is not a punishment. It is a circuit breaker designed to protect you from your worst, most emotional self.
You cannot win this war alone. The solitude of trading is a vulnerability, and you must actively work to eliminate it. The solution is not to join a noisy, hyped-up Discord room. The solution is to seek out professional community and mentorship. Find a small, curated group of serious, like-minded traders. A mastermind group, where the focus is on process, psychology, and mutual improvement, not on bragging about wins. In this environment, you can be vulnerable. You can share your struggles and get sane, experienced feedback. Hearing a successful trader say, "I went through that exact same thing," is one of the most powerful and validating experiences you can have. Beyond peer groups, consider the ultimate step: working with a therapist or a performance coach. There is a lingering stigma in our society, and especially in the high testosterone world of finance, that seeking mental health support is a sign of weakness. This is a catastrophic misconception. It is the ultimate sign of strength. It is the act of a professional who is committed to optimizing every aspect of their performance. A good therapist or coach can provide you with tailored strategies for managing anxiety, building resilience, and identifying your unique psychological blind spots. They are an objective, expert third party who can help you untangle the mental knots that are holding you back. Investing in your mind is the highest return investment you will ever make. As long as your self-worth is tied to your daily P&L, you will be on an emotional roller coaster that will eventually lead to ruin. You must consciously and deliberately shift your definition of a good day. The goal is to move from outcome-oriented goals to process-oriented goals. Instead of your goal being, make $1,000 today, your goal becomes, follow my trading plan perfectly on every single trade today. This is a profound shift. You can have a losing day financially, but if you followed every one of your rules, you respected your stop loss,
you didn't chase, you didn't trade out of boredom, you can end that day with your head held high. You had a successful day. You strengthened your discipline. Start celebrating the right things. Celebrate your patience when you waited hours for a perfect setup. Celebrate your discipline when you took a stop loss without hesitation. Celebrate your self-control when you walked away after hitting your daily loss limit. When you start measuring success by the quality of your execution rather than the randomness of the outcome, you take back control. You are no longer a victim of the market's whims. You are a professional, executing your process with excellence.
Your performance in the market is a direct reflection of your well-being outside of it. You cannot be a balanced, clear-headed trader if the rest of your life is in shambles. You must treat your mental capital with the same respect as your financial capital. It is a finite resource that must be replenished. Schedule non-negotiable time for activities that have nothing to do with the market. Go to the gym. Go for a walk in nature. Spend quality, phone-free time with your family and friends. Engage in hobbies that put you in a state of flow, whether it's playing a musical instrument, painting, or building something with your hands. These activities are not luxuries. They are essential maintenance for your mental machinery. They pull you out of the analytical, high-stress part of your brain and allow you to recover. A trader who is well-rested, physically active, and socially connected will always outperform a trader who is burnt out, sedentary, and isolated. Reclaim your identity. You are not just a trader. You are a spouse, a parent, a friend, an artist, an athlete. Trading is what you do. It is not who you are. The more you build a rich, fulfilling life outside the charts, the less power any single trade or any single trading day will have over you.
We have walked through the fire. We have looked the demons of trading directly in the eye. The journey is intimidating, and the price of entry into this profession is steep. Acknowledging this brutal psychological cost is not a deterrent. It is your initiation. It is the filter that separates the tourists from the professionals. The social media myth sells a dream, but it's a fragile one, built on sand. A sustainable career is built on a foundation of unshakable mental health, radical self-awareness, and unwavering discipline. The greatest edge you will ever find in the market is not a secret indicator or a revolutionary algorithm. It is a calm, centered, and resilient mind. That is the edge that cannot be arbitraged away. That is the edge that will see you through the inevitable storms. So, I urge you to make a choice today. A choice to prioritize your mind above your profits. A choice to see your well-being not as an obstacle to your performance, but as the very source of it. You can be a trader who burns bright and fast, a flash in the pan, consumed by the very market you sought to conquer. Or you can be a trader for a lifetime, a quiet professional who compounds their capital and their wisdom year after year. The choice is determined not by how you manage your charts, but by how you manage the person staring back at you from the screen. Protect that person. Nurture them. Forgive them. And build them into someone strong enough to play this game not for a year, but for a lifetime.
Now, I want to turn this conversation over to you. In the comments below, share the single biggest psychological challenge you faced on your trading journey. Was it fear, greed, loneliness? By sharing our experiences, we break the cycle of isolation and prove that no one is in this alone. I will be reading every single comment,